three speakers for the webinar, and towards the end of the session, we will be having an open house discussion wherein we'll be joined by foreign chapters of ICI. And I'm sure it's going to be a great learning for everybody. So without wasting any further time, let me just introduce the three speakers. So we have Mr. Arjun Prasad from IFSCA with us. We have CA Hetal Kotak, the head of listings at the NSE IX with us. And we have CA Amit Kedia sir with us, who is a domain expert in this. So I'll just jump on to the introduction of our first speaker for the day, which is Mr. Arjun Prasad. Arjun Prasad is a general manager at the International Finances Services Centers Authority, Gift City, Gandhinagar. Mr. Prasad is in charge of the division dealing with primary markets as the IFSCA. During the last 4 years with IFSCA, he has been involved in the policy making in several areas in the capital markets, including the listing regulations and capital market intermediaries regulations. Prior to joining the IFSCA, Sir has experience of over 12 years in the capital markets with Securities and Exchange Board of India and has handled various portfolios, including investigations, international affairs, takeovers, buybacks, and delisting. He has also done his MBA from IIM Indore and BTech from IIT Madras. I welcome you to this webinar, sir, and I hope we are going to learn a lot from you today. So over to you now.
Good afternoon, everyone, and thank you for the introduction. So should I start the presentation or we can start right now?
Yes, sir, you may start.
So I'm having a presentation, so I'll give a brief overview about Gift City as a concept and then about IFSC as a regulator, and before going to the main topic on direct listings. So I hope these slides are visible.
Yes, sir, they are.
Yes,
Okay.
sir.
So Gift City is a smart city. This is Gujarat International Finance Tech City. This is very near to Gandhinagar and very close to Ahmedabad. And the IFSC, which is the International Financial Services Center, which is the maiden IFS in India, this is set up within the Gift City. So let me cover in more detail. So Gift City as a concept has two parts. One is the special economic zone where IFSC is situated. And there is a domestic tariff area also, which remains the domestic part, means the entities which are set up in the domestic side continue to be regulated by SEBI, RBI, or insurance regulator. It's more like a smart city, but not an IFSC zone. And it's a greenfield smart city. So total area is 886 acres, out of which 2/3 of the area is the domestic side. And 1/3 area is the IFSC special economic zone. And we regulate the IFSC zone, which is 1/3 of the area. So since it's a new greenfield city, there are many social infra here, so hotels, hospitals, schools, etc. And we have both commercial as well as residential buildings here. Coming to IFSC, so IFSC was set up in 2015. Gift City is there since 2007. So IFSC has been set up in 2015 as a special economic zone, and the exchanges were set up in 2017. And IFSC as a regulator came in 2020. In 2019, government thought that let us have a unified regulator, because otherwise people were required to deal with multiple regulators for any policy change. So the concept of IFSC Act, it came in December 2019, and with effect from October 1st, 2020, we became the unified regulator, which means we are the regulator of banking, capital market, insurance, pension fund. We are the only regulator for this particular zone, which is the IFSC. So it has been a close to now 5 years and more than 4 years, and we will be reaching 5 years on October 1st. So several reforms have been taken place across the sector. So I'll cover in more detail what are the reforms which have been taken place and the success story. But legally, it is important to understand the concept of Gift City, which is IFSC. So in the left column, I have compared it with a foreign jurisdiction, which means any jurisdiction like Singapore, London, or any other country. In the rightmost, it is the domestic area, which is the regulated by SEBI RBI, and in the center is the GIFT City. So when it comes to Foreign Exchange Management Act, the entities which are set up here, they are treated as non-resident, which means uh, if they invest into India, they will come as if it is investment coming from any foreign country. So it will come through the FPI route. But if there is any capital flow from IFSC to any other country, there is no restriction at all. RBI's norms doesn't apply to such movement of capital from IFSC to any other country. It's a non-resident to non-resident zone without any capital controls. So it makes very attractive for foreign entities to set up here for their business. Currency, we don't deal with Indian rupee. We have permitted 15 foreign currencies, and the most popular one is US dollar, and we have many other currencies, including euro, we have dirham, we have rubles, and many other currencies. The total 15 currencies we have notified as permitted currency here in IFSC. Taxation, I am having a separate slide, but we come under the Indian Income Tax Act, and there are several relaxations and carve-outs provided for the entities for the activities which are in GIFT City. In terms of other law, which means there are laws like SEBI Act, Depositories Act, SCRA, 3 act under SEBI. There are many other acts which RBI exercises powers. Total of 15 acts. All those powers of RBI, SEBI, IRDA, and PFRDA have been delegated to IFSCA for regulating the financial services here in IFSC. So we can use the power of SEBI Act for coming out with regulations, for any supervision, for any enforcement. We can use the power of Depositories Act, SCRA, all those powers we can exercise for regulating the, which makes it very, very powerful law, which IFSCA Act has been notified by government. In terms of other law, we are part of India. For example, corporate law, Companies Act. So the entities which are set up here, they are considered as Indian companies under Companies Act, not as a foreign company. So they fall under the same ROC, and there are certain exemptions within the Companies Act through notifications under the Companies Act and IFSC Act. We are a unified regulator, I have already mentioned, and it makes it very easy for the entities to deal with one regulator. No capital controls, 15 currencies. We aim to benchmark with the foreign jurisdictions. So our objective is to attract foreign capital. So our laws, our regulations, it's globally benchmarked. So we compare with some of the centers like Singapore, Hong Kong, London, US, and Dubai while making our regulations. We have strong support from government, both central government and state government. And I have also tried to compare what are our competitive advantage vis-a-vis some of the other foreign centers. So if you see some of the foreign centers, they're already set up for many years. But what benefit we have is we have a very strong Indian economy, which is the fastest growing economy in the world. And we are soon going to be third largest economy in the world. So it makes it very attractive for those foreign investors to invest into India. We have a benefit of the huge hinterland advantage, which many other jurisdictions may not have. The cost of operations, it's very, very less compared to some of the global financial centers, and we have young population, we have skilled talent available within India, so which is very useful for a financial center. Banking, we have now close to, I think, more than 30 banks. So we have granted one or two in principle approvals very recently. So we have 16 Indian banks. We have around 15 foreign banks. So banks from US, from Middle East, from UK, from Europe, from Singapore, from Japan, from Australia, they have set up here. In fact, we have 3 banks from Japan which are present here. So we have all the global banks present here. We have all the large Indian banks. They have set up a foreign branch here in IFSC. So the branch of Indian bank are considered as foreign branch. For example, ICICI Bank or HDFC Bank, their branch here, it's a foreign branch from FEMA perspective. Capital market, I will cover in more detail, but we have exchanges, clearing corporations, depository, broker dealers, various types of intermediaries. Fund management has been very, very successful. Our regulations came in 2022. Within a short period of time, we have more than 200 funds already set up within 2-3 years, and there are many inbound funds. There are funds now, outbound funds being set up. So very recently, one retail outbound fund has also been launched from here. So we are having both inbound and outbound fund. So we act as a gateway for cross-border fund management. We have investment advisors, we have portfolio managers, distributions, insurance, and there are many other niche area like bullion exchange, finance companies, entities can set up treasury centers, aircraft leasing, ship leasing. So these have been enabled as financial services. We have foreign universities. We have 2 Australian universities present here. We have many fintech entities, global in-house centers. So Bank of America has taken more than, I think, around 15 floors here, 2,000 employees for their global in-house centers. We have ancillary providers, and there are other services like bookkeeping, accounting, BATF we call it, and payment service providers. So as a unified regulator, we have come out with laws, various laws, cutting across various verticals. I have highlighted the ones which are relevant to capital markets and securities market. So we have market infrastructure institutions regulations, which covers exchanges, clearing corporations, depository. We have fund management regulations, which covers all types of fund management activities, including AIFs, portfolio management services, PMS, mutual funds, all type of fund management into one regulation. We have unified regulations on capital market intermediaries. I understand Amitji will be covering in more detail on these CMI regulations. We have listing regulations, which I'll be covering in the presentation about listing of equity, debt, and various other products. We have very strong laws, stringent laws when it comes to KYC, AML, CFT guidelines. So in fact, we had a mutual evaluation of FATF, and India has been rated very high in terms of implementation of FATF recommendations. So we do not have any compromise on the KYC standards. We operate on based on the PML rules and PMLA Act notified by Government of India. Very quick update on business highlights. So we have more than 800 entities as of March 2025. So as I told, the financial center IFSC started in 2015. So 2015 till 2020, when IFSCA got set up, there were only 100 entities, 100 odd entities, 120. But now in the last 4-5 years, from 100, it has quickly jumped to more than 800. And very soon we'll be crossing 1,000 registered and licensed entities. The exchanges, they have very high volume. So Hetal will be covering in some detail, Hetalji from NSC. So NSC International Exchange has a connect with Singapore Exchange on Nifty futures, which is very liquid, and the volumes, it's more than $100 billion in some of the months. So average volume is the March, it was $95 billion. Fund management, as I spoke, we have more than 160 fund managers. We have debt listing, foreign currency bonds and masala bonds by Indian issuers. They are listed here. Now we are having listing from companies from other jurisdictions also. So we are having a company from Sri Lanka. They have recently listed here. We have listing from multilaterals like ADBs, IFC. They have listed bonds here. And the targeted corpus of the funds, that is the targeted corpus, which is more than $50 billion. And they have already raised commitments from more than, I think, $15 billion. And they have already made investment of $8 billion in a very short span of 2 to 3 years. So these are some of the names. Banking, you can see Stancy, HSBC, JP Morgan, Citi, ANZ, DBS, Mizuho, and recently Qatar National Bank, they have also been given in principle approval. So they will also set up here. And in the fund sides, we have Abu Dhabi Investment Authority, which is a sovereign wealth fund. They have set up here, and there are many other large institutions. They are investors in the fund. So these are the ones who have set up here. So Lighthouse, Canton, Lightrock, Morgan Stanley, and most of the Indian large fund managers, they are already present here. Service providers. So in terms of ancillary service providers, we have EY, KPMG, PwC, legal firms, fund administrators. We have other entities like the IFSCA, Bank of America. We have a regime for TechFin and FinTech. So Wipro and others are in the TechFin category, aircraft leasing, ship leasing. we have Indigo Air India, and Reliance into ship leasing, ArcelorMittal into ship leasing. In terms of tax benefit, so entities which are present in IFSC, which means the regulated entities, registered entities, licensed entities, and operating from IFSC, those service providers will get tax benefit on, there's a tax exemption on their business
कंफर्टेबल
income
हो आप बात करने में?
for 10 out of 15 years. And we on the securities which are listed on the exchanges for foreign investors, we don't have any capital gains, any securities transaction tax, no CTT, no GST, no there's no tax at all for those foreign investors who trade on the securities which are listed here, including equity or debt or derivatives. This is extremely important for bonds which are listed on IFSC exchanges for Indian issuers. The withholding tax is only 9% on interest paid, and otherwise it can go to 20% or 15% or 10%, depending on agreement between India and the jurisdiction from which the investor belongs. So, but if the bond is listed on IFSC, if the investor is from any country in the world, the withholding tax is only 9%. As a result, in the last 2 years, we have seen many Indian corporates, they are listing exclusively on the stock exchanges in IFSC. We have a competitive tax regime for both inbound funds and outward funds, and there are some incentives from Gujarat government also. Coming to capital market ecosystem, we have 2 stock exchanges and 1 bullion exchange. So India in INX is the subsidiary of BSE. NSE International Exchange is a subsidiary of NSE. And we have 2 clearing corporations, India ICC for India INX, NSE International Clearing for NSE International Exchange. We have 1 depository here. In India, we have NSDL CDSL, but here it is 1 depository, India International Depository IFSC Limited. And the parent of both the depository and the bullion exchange, it's a consortium of 5 institutions, which includes all the 3 exchanges, NSE, BSE, MCX, and NSDL CDSL, 2 depositories. All 5 of them, they have jointly set up the bullion exchange and the depository here. And there are many intermediaries, so I'll be covering, I think, more detail. So we are having various kinds of products traded here. Derivatives, mainly secondary market is in the derivative side. We have index derivatives like Nifty futures, Sensex futures. These are traded in US dollar, so it's not an INR product. We have currency futures. We have commodity derivatives like gold futures, depository receipts. So there is 1 GDR, ADR, which is secondary listed on NSE International Exchange. We have various bonds which are listed here. Apart from these products, there are some innovative products like unsponsored depository receipts on US stocks, which are traded on NSE platform. Now coming to the topic for today's discussion, that is direct listing. So it covers, direct listing of companies can take place from all types of companies, including Indian companies, IFSC companies, and foreign companies. So let me give some background about listing of Indian companies first, and then we'll go to the other companies. So as you know, Indian companies, as you may know, Indian companies were in the previous regime, they were permitted to list only on the domestic stock exchanges, that is NSE and BSE. And for any listing outside of India, they were required to go through the depository receipt route, which is the ADR and GDR. And Government of India notified the new rules for DRs in 2014. But in the last 10 years, there has not been any success in the DR route. So companies are not going for any listing outside of India. So Government of India, Honorable Finance Minister, announced for the first time in the country that the Indian companies can directly list equity shares instead of going through the DR route, equity shares directly on the stock exchanges in IFSC. And this is exclusively permitted only for IFSC jurisdiction, and they cannot list in any other country like US, UK, or any other country. It's an exclusive exemption granted for IFSC jurisdiction. So the announcement says that this was made in July 2023. The decision was announced. So direct listing of listed as well as unlisted companies on IFSC exchanges. So which means unlisted companies can do an IPO, even Indian listed companies. So they can also do a follow-up offering, and they can do a another listing on the IFSC exchanges. So this was an announcement in July 2023. And so after July, the necessary notifications or commencement of Section 23(3) and 23(4) of Companies Act was done in October. And in the meanwhile, a working group was constituted where we had members from IFSCA, from SEBI, from market participants, to basically come out with recommendations on the operational aspects when a company will be listed on both the markets, including, for example, in the domestic side, NSE, PSE, and on the international exchange that is NSE, IX, and India NX. So this report, which was submitted in December 2023, they gave out the recommendations for various operational issues, like how will the depository connect, how will the shares move, how will the regulations work out on various regulations which SEBI has, which IFSC has. So after submission of this report in December 2023, the notifications were issued by Government of India. That was in January 2024. So there are two key rules notified by government. One is the direct listing scheme, which forms part of foreign exchange management non-debt instrument rules of 2019. So those NDI rules were amended. A new chapter on direct listing scheme was notified, basically because Indian companies, when they list on IFSC exchanges, FEMA has to enable it. So those notifications were done in FEMA NDI rules. The other rule was under the Companies Act. So the rules under Section 23(3) on the eligibility criteria on allowing Indian companies to list equity shares on international exchanges. So both the rules under Companies Act, we call it as LEAP rules, and NDI rules were notified in January 2024. So we thought this is an important opportunity. Let us review our regulations. So our regulations for listing, it was originally notified in 2021. And as per we have a law, we have a regulation for the process for making regulations. So in terms of our IFSC's process, we are required to review every regulation in every 3 years. So after 2021, we thought, let us start the process for reviewing our listing regulations. So we invited suggestions. We formed a standing committee on primary markets, which is chaired by Mr. Mohan Daspai, and we have market experts from various sectors. We have representations there, and they did a study. There is a subgroup of the committee. They did a study of global benchmarking of various jurisdictions, and based on the recommendations by the standing committee, we came out with a consultation paper and we notified the new listing regulations in August 2024. And I'll cover more details about the new regulations in the coming slides. So from August 2024, there has been great interest from issuers to explore listing in IFSC exchanges. And there are a couple of issuers that are at a very, very advanced stage of doing the first IPO. So we are expecting the first IPO to take place maybe next month. So these are the two rules which I mentioned. Direct listing scheme under these rules, amendment rules were notified in 2024. So FMI NDI rules 2019 and the companies LEAP rules 2024 under Companies Act. So these two rules combined provides the overall framework for listing of Indian companies. So, and we notified our regulations in 2024, and there are FAQs, detailed FAQs issued by Government of India on direct listing. So the scheme covers both aspects, which means the company can issue new shares for raising fresh capital. That can be the objective or the idea for coming for listing, or it can be an offer for sale where the existing shareholders, existing investors, promoters, they are offering shares to public. So both are covered, very clearly covered in the rules notified by government. So Indian company can have new shares or offer for sale or a mix of both new plus OFS. And it covers both unlisted and listed. So unlisted, all the rules are in place. For listed, we are working with SEBI, because SEBI has to come out with amendments in various regulations on how these regulations will operate when it comes to companies being duly regulated in both the markets. So there may be amendments in ICDR, LODR, and other laws, takeovers, buybacks. So those amendments we are still working with SEBI. So it will take some more time, maybe a few months, for operationalizing listing of already listed Indian companies. So when it comes to permissible holders for an equity listing by an Indian company, only foreign investors can participate, which means the permissible holder cannot be a person resident in India, and the beneficial owner shall also not be. This restriction applies to beneficial owner of the company also. So it has to be either NRI, it can be FPIs, it can be eligible foreign investors or other non-residents, but resident Indians cannot participate in direct listing of equity shares of Indian companies. In foreign companies, they can participate, but not in Indian companies. Further, if it is a country, if the investor is from a country which shares land border with India, for example, China, or any other jurisdiction, they are required to take approval of central government, the investor, before making any investment in these companies. This is again important because Indian companies are listing on IFSC exchanges, but the applicable foreign investments limits in terms of FDI limits, FPI limits will continue to apply. So if there is some FDI limit in any sector, that will still apply because it is an Indian company. And even if the company is listing on IFSC exchanges, those foreign FPI limits will continue to apply in these companies. In terms of pricing, the rules say that for an Indian company doing the IPO for the first time, the price has to be determined through big book building process. Coming to our regulations, so when we came out with the regulations, these were the important factors which we considered. One is most important is IFSCO principles. IFSCO is the standard setting body, global standard setting body across the world. So they come out with various recommendations, guidelines. In fact, IFSCO has core principles. So there are 38 principles which are there, and all the assessments across the world by IMF, World Bank on securities market takes place on the basis of these principles. So we have taken into account the IFSCO principles relating to primary markets and IPOs. So those have been taken into account. We have compared global best practices in some of the countries like US, Hong Kong, Singapore, and UK. And we have made changes to make it easier for the issuers to list. So ease of doing business has been kept in mind while drafting the regulations. And some of the aspects we have kept in mind that both categories, Indian and foreign companies can come here. For example, the concept of promoter, it may not be present in some of the markets. So we have considered controlling shareholders for such companies. A promoter is largely Indian oriented concept. So those elements we have kept in mind. So our regulations, it's a unified regulations covering all aspects of listing, including IPOs, FPOs. Our regulations also permit listing of SPACs, secondary listing, DRs, debt securities, and other financial products like CPs and CDs. Coming to the technical aspects of equity listing, so we have eligibility criteria where we have three tests, which means either the company has to have revenue, or it has to meet the profitability or market cap. So it's not revenue plus profit plus market cap. It is revenue or profit or market cap. So if the company is having $20 million revenue, they can list. If the company doesn't meet the revenue test, if the company is meeting profit of USD 1 million, they can list. But many startups, early stage startups, or even large startups, they may not have profits. So we have kept a market cap criteria. So if their market cap is 25 million US dollar, they can still list. So this is an enabler to facilitate listing of startups. Filing of offer document. This is in terms of ease of doing business extremely important. So what we have done is for small issuers, so less than issue size of less than USD $50 million, they can go ahead with listing with exchange approval. So there is no need to wait for IFSCA's approval as a regulator. So they can file the document with IFSCA, and with the exchange approval, they can go ahead with listing. For issuance with more than USD $50 million, they'll have to wait for IFSCA's observation letters. And once we approve the document, or once we give the observation letter, then only they can come out with IPO. Disclosures in offer document. So we have tried to take a balanced approach where information which is very, very critical for investors, which are extremely important, and those have to be provided. But at the same time, we have taken a principle-based approach that we have given the important key requirements to be disclosed, but we have not gone into each and every detail of what should be the format of disclosures. So those things we have not specified. So all material disclosures have to be disclosed, and financial information should not be older than 135 days. Accounting standards, IFRS or US GAAP or Ind AS, and in case the issuer is following any other accounting standard of its home country, so they have to reconcile with the IFRS, and disclosure of risk factors, offer document summary, proceeds, use of proceeds, litigations, material related party transactions, those have to be, and many other disclosures which are mandated by IFSCA. Once we have given our observation letter, there is a time period of 12 months for the company to come out with offer. So they can time their listing depending on market conditions. So that period we have specified of 1 year time we have given for the issuer to come out with IPO. And offer period, we are quite flexible. So it can be 1 working day, or it can extend till 10 working day. So that flexibility has been given to the issuer. Pricing is again fixed price or book building, but for Indian company, the rules clearly say it is only book building for the first listing. For a foreign company, it can be both fixed price or book building. This is an important change from the domestic side. Minimum public offer, as you may be aware, in the domestic side, it is 25%. Here we have specified minimum public offer, minimum public shareholding of 10%, and we have benchmarked with the requirements in Singapore and UK. In fact, UK has also moved from 25 to 10%. So the promoters, they can retain control. At the same time, they can come out with an IPO, and they can offer shares to the public by offering 10% to the public. So this makes it easier for some of the startups to come out with IPO, and even other companies to come out with IPO with only 10% MPS. Underwriting, it is permitted. So the underwriter, the requirement is to disclose all the underwriting agreements in the offer document. So they can have underwriting agreements with the investment bankers. Anchor investor, again, subject to all the disclosures, anchor investor are permitted. This is an optional. So if they want, they can appoint a monitoring agency for monitoring the use of proceeds. Otherwise, there's a requirement to disclose the use of proceeds in every quarter. So that has to be done. And the lock-in is again a significant change from the domestic side. It is only for promoters. This is again, we have compared with Singapore and other jurisdictions. It's only for promoters and controlling shareholders. And it is only for 180 days, so 6 months lock-in. And then they can sell shares in secondary market. So from issuer perspective, if you see what are the benefits for compared to an unlisted startup, they can come here, they can have expanded investor base, they can have better valuations with startups looking, or other companies looking for investments from foreign investors. They can come here and get better valuation. They can diversify. This helps in financial flexibility and diversification, which means they can have some foreign listing here in US dollar. And it also helps those companies who are looking for investments in outside of India. For example, they are having some business in any other country like Africa or Middle East or US. So they can raise capital in foreign dollar. They can keep foreign dollar in IFSC, and they can use same foreign currency dollar for making their investments. It can be used as an exit strategy for investors who have already invested, PE funds, other investors, other funds. So those can make an exit by coming out with an IPO through IFS. They can unlock their value. From investor perspective, there are several benefits. Example, no tax, so no capital gains for foreign investors, no capital gains, no STT, no GST. Our exchanges, they operate, IFSC exchanges operate for more than 20 hours trading. So it covers from Japan till US. So it's a quite easy for the investors to invest anytime. And trading is in foreign currency, US dollar. So it is again, the foreign investors prefer to deal in US dollar. So these are the benefits from investor perspective. Coming to specifically on foreign companies, there are certain other advantages also compared to Indian companies. They can, when a foreign company is coming out with an IPO, Indian investors, resident Indians can also participate, subject to the limits by RBI, for example, LRS limit. So within the LRS norms, Indian retail investors can also participate. Mutual funds subject to the limit of $7 billion, which is there. So that within those limits, if a mutual fund they want to participate, they can also participate. And other permitted entities under the FEMA overseas investment rules, whoever is permitted to invest outside India, so those resident investors can also participate in a equity listing or any listing by foreign company. In fact, what we have seen based on our initial discussions with some of the entities, there have many Indian unicorns in Indian startups. They operate in India, but they have formed structure in offshore jurisdictions like Singapore or US, Delaware, and other jurisdictions. So now they are seeing Indian market as very, very attractive. Just to share with you some numbers, I think last year India had close to around 300 IPOs, whereas some of the markets they were struggling with any IPO. For example, Singapore had only 4 IPOs. UK, they came out with new law for IPOs. Some of the markets now, companies are more delisting compared to listing, but India is very, very liquid. So companies want to come back to India for doing IPO. Some of them are doing reverse flipping, where they're forming new structures in India, but they have to pay tax obligations come on those companies. So IFSC is a jurisdiction where there is no need for the issuer to set up a company. They can be in any foreign jurisdiction. They can raise capital, do an IPO. They can also raise money from Indian investors subject to those RBI limits, and they can do an IPO here. So these are continuous disclosures after the company is listed. So I will not go into more detail, but these are there in our regulations. So we have tried to take a balanced approach where price sensitive financial statements, shareholding pattern, everything has to be disclosed. And we have not gone into too much details like the LODR which we have, and for reasons, because LODR is meant to protect the retail investors. Here it is mostly institutional investors, and we have left it that way. Very briefly, I'll cover debt securities also because this is already very successful. So I thought while equity listing is important, it's also important to understand listing of debt securities here. So our regulations are very light touch because that market is mainly for institutions. It's not for retail. So here the company can directly go to the stock exchanges, file document, and they can list bonds here. There is very, very minimum role of IFSCA, and when it comes to debt listing, and our regulations for debt listing, it's aligned with global markets. When it comes to debt listing, Luxembourg, London, and Singapore have been very successful. So we have aligned our regulations with these 3 markets. And we have transparent and very simplified listing process by exchange. I'm sure Hetalji will also cover in some detail. The listing phase, it's very, very competitive. And we have done a study also where the listing phase, when a company is listing on IFSC exchange, it's very less compared to some of the other markets. And when it comes to debt listing, we have also given this flexibility that the bonds can be issued either on our depository or they can use the international depositories. So they can use Euroclear, Clearstream, DTCC, which is in US, Euroclear, Clearstream are mainly in Europe. So those global depositories can also be used. So foreign investors may have their existing accounts in these depositories. They can subscribe to the debt listing. One change which we have done is in the recent regulations which are notified is we have mandated credit rating. So for any bond listing, and because of our mandate, we have seen global rating agencies set up here. So CareEdge, which is an Indian rating agency, they have set up a new entity here, CareEdge Global Ratings, and they are the first Indian rating agency to enter into this space, and they're competing with global rating agencies. They have started sovereign rating also. They have given sovereign rating of 39 countries, and S&P has also recently taken our registration to set up here. So we are mandated that from this financial year onwards, every which is listed here, they need to have one rating from an rating agency registered with us. So we have several issuances here. So large corporates, PSUs, NBFCs, banks, even smaller entities. So these are some of the names, but there are many, more than 170 issuances on IFSC exchanges. We have been very successful when it comes to ESG labeled bonds. So we have globally benchmarked regulations on listing of green bonds, social bonds, sustainable linked bonds. And very recently, we have issued the circular for transition bonds, which covers hard to abate sectors like steel, cement, and many other sectors. So our framework, it is, they can follow either climate bonds initiative standards or ASEAN, EU, or ICMA standards. So these are global standards recognized across the world. So these are more technical details. So when it comes to listing of green social sustainable bonds, they have to make these additional disclosures. So pre-issuance disclosures, and after listing, there are some disclosure requirement. And every ESG level bonds, they need to be appoint an independent external reviewer to see that their bonds are aligned with the global standards. So these are some numbers, and more than $65 billion listing has taken place on our IFSC exchanges, out of which more than $15 billion are on the ESG side. So this is probably one area where on the listing of ESG bonds, probably where we have more listings than the domestic side, because foreign investors, they look for ESG labeled bonds. So already more than $15 billion has been listed on the IFSC exchanges. All the four types have been listed: green, social, sustainable, and sustainability linked bonds. So what we have done recently, we have prepared a detailed report giving very detailed analysis of all the bonds which were listed in the last financial year, FY 24-25. So I'll present some of these important slides, but if somebody wants to see the report, it's there on our website, which gives a very detailed breakup of all aspects relating to bond listing. So last financial year, we had 57 issuances, close to $7 billion, and all of them were USD denominated in the last financial year. Mostly it were NBFCs. So many NBFCs have come here. There are banks like State Bank of India, Canara Bank, SDFC. We have few infrastructure companies, one energy companies. So those are the large ones who are dominating bond listing. And for the reason is very clear. I mean, NBFCs, they need to refinance. So many NBFCs are using IFSC for raising foreign capital here. Maturity of the bonds, mostly it is 3 to 5 years, tenure of the bonds which are listed here. So out of 57, I think this is the most common one, 3, 4, 5 years. And this is actually very interesting. So when it comes to 57 issuances, if you see the breakup, there are many small issuers also listing foreign currency bonds here. So if you see 21 issuances are less than $10 million. So out of 57. So even the small corporates, they have started using IFSC platform. And there are larger ones also. So above $500 million, there were 2 issuances. So the various types of entities are using IFSC platform for foreign capital. Our depository, if you see the small issuers, they prefer IFSC depository because the cost is less compared to some of the foreign depositories. So 63%, while we have not mandated, they can use foreign depositories also. 63% have used IFSC depository, and 9% they have used DTC, which is US depository, and the others are mainly Euroclear and Clearstream. So our depository is being used by various issuers for bond listing. So I think I have covered equity listing, debt listing. So I will stop here and maybe we can take questions later.
I think whatever Arjun sir has shared with us was indeed very insightful to know and to understand how the IFSCA works. I think he has given us a good overview of how it works. So thank you so much for your presentation, sir. And we will be taking up questions from the participants towards the end of the session. So if the participants have any questions, they can drop in their questions in the Q&A box below. And I think we can move on to Hetal ma'am now. Thank you, Arjun sir. Before we
Thank
start
you.
with Hetal ma'am's introduction, I would like to address that the chairpersons and chairman of the foreign chapters are also here with us. And we have CA Anuradha Shroff from the Singapore chapter of ICI. We have CA Jayaprakash Agarwal sir from the Dubai chapter of ICI. We have CA Madhur Gupta sir from the Riyadh chapter. And we have CA Puneet Bakshi sir from the Indonesia chapter of ICI. I welcome all of you to the webinar, and really it means a lot to have the foreign chapters with us as well. And we would love to know more from you regarding the topic in the open house discussion. So let's move on to Hetal ma'am's introduction now, who is the second speaker for the day. So Miss Hetal is a chartered accountant. She's the head of listings at NSE International Exchange. She has over 20 years of experience in the capital markets, and she's presently the head of listings at the NSE IX and the leading and dominant stock exchange in the GIFT IFSC. Over and above the core work area of fixed income, she is also responsible for the new product development at the exchange and works very closely with the regulators and market intermediaries to fulfill the vision of IFSCA in marketing the GIFT City, which is the hub of sustainable finance. She has played a pivotal role in driving issuers and intermediaries to raise capital and leverage India's first IFSC, which is GIFT IFSC. In her previous roles, she has worked with India International Exchange IFSC for over 5 years and BSE Limited for over 10 years in the fixed income segment in charge of primary and secondary market functions. So I welcome you to this webinar, ma'am, and I hope that we'll learn from you regarding the working of the NSE IX related to the topic for today. So over to you now.
Thank you. Thank you so much for the very kind introduction. And good evening to everybody present here. Good evening to the respected colleagues from other overseas chapters, Arjun ji, Durgesh ji, Amit ji, and it's an honor to be here. To begin with, I'd like to say Arjun ji has made my task very difficult because he has more or less covered everything that I was going to be speaking about right now. However, just allow me one more. I'm sorry about that. Yeah. So as I said, Arjunji has made my task very difficult because he has covered mostly everything. But I'm here to give an overview about what we are doing here at IFSC and how is it that we are enabling intermediaries, issuers, investors to use our very own finance center here. The entire idea, I would like to set the tone for whatever I'm going to say now. The entire idea behind GIFT IFSC is that if we can make in India products, we can also make in India services. So that is the core ethos behind everything that we are going to present here and everything that our exchange and IFSCA is focused on doing. So all the services which our issuers, intermediaries, all others used to avail from centers such as Dubai, Luxembourg, London, Singapore, in times prior to this. Those services can now be availed from our very own GIFT IFSC. That is the main core ethos and the tone that I would like to set for what I'm going to present now. As I said, there's a lot of overlap in what Arjun has already covered. So I'm going to try to make it as exchange specific as possible. That way we can cover the entire gamut of regulatory plus the exchange bit of presentation in terms of how an issuer or how an investor can actually leverage GiftCity. I'll be sharing my presentation now. I hope it's visible.
Yes, it's visible.
All right, thank you so much. So I'd like to begin by sharing this vision of our Honorable Prime Minister, which has inspired us for years now. That GiftCity is not merely a premise, it represents India. And the first thing that he had said when GiftCity was inaugurated was that it is his vision to onshore all the offshore services. As we have already shared what Arjunji has already shared what GiftCity comprises of. But it is very important to understand that there are two very, very important regulatory bodies in GiftCity. One, we have the Gift Tech City, the Gift Gujarat, and then we have the IFSCA. The emergence of IFSCA has been a boon and has been fantastic for every single participant in the GiftCity, because Arjun was very modest in saying that they have powers of 1, 2, 3, 4 regulators, but it is the only unified regulator in the entire country. Rather, I would say it is a first of a kind in any other foreign jurisdiction. And therefore, the ease of doing business in GiftCity has been excellent ever since the IFSCA has set up in 2019. So they have the powers of SEBI, RBI, MCA, PFRDA, and therefore every issuer has a single window and single door to knock, as to when he wants to get any approvals or any clarifications. So that is the core, background of what we are at GiftCity. Talking about what I represent, I very proudly would like to say that these are some details about our parent. We, not that anybody does not know what NSE India is, but NSE is the largest exchange in the world. We were the largest derivative stock exchange in the world as per the WFE report. We have, as Arjun already mentioned, last year was a fantastic year. We have had the most number of IPOs on the domestic NSE, which has been more than any other global jurisdiction. Again, the credit goes to all of us attending this seminar here. Some way we are a part of the growth of the Indian capital markets, and we have all contributed to this in some way. The confidence of an investor, the confidence of an issuer only comes when he sees that there is a strong investor community that is there to support him. Some other details about our key subsidiaries. We have the NSE Clearing Corporation, what I represent, the NSE International Exchange, the NSE International Clearing Exchange, our NSE Data and Analytics, and NSE Indices. This is the entire gamut of the services that NSE offers under its large umbrella. Some few snippets about our exchange. As our MD of NSE, Shri Ashish Kumar Chauhan, always says, that there are barely any pin codes where there is not a single client or a single capital market investor in India right now. And this is testimony. 99.8% of pin codes, and we all know how many pin codes there could be in a country like India. 99.8% pin codes have a capital market registered investor. That means they are all trading on the stock exchange. In terms of capital formation, in terms of investor protection, the numbers itself are a testimony of how large an institution NSE is. Coming to what I represent, NSE International Exchange. NSE International Exchange, we are a 100% subsidiary, as I shared, of NSE India, and we are operational since 2017. And I'm very happy to share that we are the only stock exchange with an exemption from CFTC under the regulations, whereby customers from US can participate in derivatives contracts which are listed on NSE IX. This is a very unique exemption that we have. A lot of accolades that have been won by us are just shared here. I won't go into too much detail of that. This is the most interesting thing that I would like to share here with the participants. Why do we boast and why do we call ourselves a preferred gateway for inbound as well as outbound investments? When we talk about inbound investments, I will just come to our flagship product and share a few details about the volumes and the quantum of the GIFT Nifty which is traded. When I said setting the tone for the presentation was onshoring the offshore, the GIFT Nifty product is a testimony to having onshored the offshore. So GIFT Nifty was trading earlier as SGX Nifty on the Singapore Stock Exchange. And post the collaboration between the two exchanges and post these services being available from to be provided from GIFT City, which is an offshore jurisdiction, the trading in dollar terms is permissible. All this volume has been now onshored and it is trading on our stock exchange. I will share the volume chart with you shortly, and the numbers have increased exponentially. We have a lot of other inbound products also. We have currency futures, we have fixed income derivatives, we have as a very vibrant debt market, which has only flourished over the last 5 years. The confidence of the issuers has only grown. And as Arjun has already touched upon it, but very recently, we have listed a green bond from a Sri Lankan company, and that itself is a testimony as to how we are emerging as the as a great destination for the foreign currency instruments in the global south. Then we have the sustainability exchange platform. We have equities, which is now the most the topic that we are discussing today and something which is most awaited. We have CPCDs listing, we have AIFs and ETFs listing also. IFSCA has already published regulations for all these, and we are awaiting for issuers and investors to take advantage of this. As far as outbound access is concerned, I would like to share that we have a very unique product where we provide access to US stocks. So NSE IX has a connect whereby you can own an Apple, Tesla, or a Google, not just in form of a DR or not just in form of a notional stock, but in form of an actual stock in your demat account in GIFT City through this access that we provide for outbound stocks. Tax benefits, as Sir has already shared, there is no STT, no CTT. The capital gains for foreign investors across all asset classes has been waived. And the biggest advantage for an Indian issuer raising debt out of GIFT City is that on the interest payments, the withholding tax is only 9% versus 20% if he were to list this at any other foreign jurisdiction. So these are the main tax benefits which are applicable for people at large. If an entity was to set up, the minimum, the MAT is only 9%. There is a 10-year tax holiday. The key advantage of this 10-year tax holiday is that it's any 10 years out of 15. So if the first 2 years you would not wish to begin claiming that tax holiday, you can choose those 10 years. There is a tax exemption on interest payouts and all the other exemptions which are mentioned here. There are a lot of incentives provided. As I said, that the fiscal advantages is one part of it, but the tax advantages only do not make a jurisdiction a successful one. It is one of the pillars. The other pillars are ease of doing business, which is provided by the regulators such as IFSCA. I just want to share with you because we might have a very wide set of participants here. So mainly, I think something that would be of interest here would be that if it is a SEBI registered FPI, that SEBI registered FPI can be a trading member, a clearing member, and a client of a trading member in Gift City currently, with a very easy and seamless onboarding process. If a entity from any FATF compliant jurisdiction wishes to set up a branch in Gift City, that entity also can set it up in form of a trading member as well as a clearing member. The most unique uh, 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 the most unique approval that has come in the last year has been that of remote trading participants. Any entity which is regulated by a securities market regulator out of a list of, I believe, 29 stock exchanges, if I'm not wrong, or it has membership with any of the exchanges as IFSCA has clarified, that entity in the most seamless way can become a member on our stock exchange and can trade on proprietary basis. Now your question might be, why would an entity who's already a foreign member wish to do something of this sort? But the tax advantages, the ease of trading in dollars, the extreme liquidity that we have on the Gift Nifty product makes it convenient for those entities to trade directly in Gift City rather than trading on the Nifty product itself on any other stock exchange. And therefore, this has been a boom, and a lot of participants have approached or are in the process of becoming RTPs, as we call them. These are just some highlights that I would like to share with you with regards to our flagship product. As I stated, we have just about started, I would say, in 2022, but the numbers, I will go to the numbers first and then come here. The numbers itself are a testimony. If we see the volumes, the monthly volumes, and we've tried to cover only something, only something over the past year or so, we have about $90 billion of Gift Nifty being traded on our platform on a monthly basis, and it's extremely liquid. This is just a highlight about what the unique model was. A single pool of liquidity for the largest Nifty contract was created. It is now regulated by IFSCA and MAS together. And this connectivity that was built between the NSE International Exchange and the SGX Exchange has really, as I said, proved to onshore the offshore. These are just some numbers on our dominant market share in the Gift City. And as you can see, where we have from a meager number in 2017-18 to the large volumes in this current last financial year, which has passed by. That was a little update about all the products that our exchange offers. Coming to a little more detail on what we are here to discuss, which is direct listings. I'd just like to touch upon what are the opportunities for Indian companies to raise funds in Gift City. The Indian company can be either a listed company or an unlisted company. In fact, to be very candid, right now, the doors for the unlisted companies are completely open. They are awaiting for some clarifications on listed companies from SEBI, which will very, very soon be issued. And that will open doors for a listed company on the domestic stock exchange to be able to leverage and raise foreign money from Gift City in form of direct listing. And if it is a foreign company, whether it is unlisted or listed, they can come via any of these routes. They can come via equity listing. They can do a dual listing. So, for instance, if an instrument is already listed on NASDAQ or Colombo Stock Exchange or Singapore Stock Exchange, they can easily do a dual listing here, or secondary listing as we call it, on Gift City, and we can facilitate trading with a completely new diaspora of investors here in Gift City. And then we have depository receipts, REITs and InvITs, and debt, which is, as we said, the most vibrant market right now in Gift IFSC. Slightly touching upon what cross-border capital raising opportunities are available. Many Indian corporates have businesses and investment footprints overseas. The GIFT City presents a unique platform to facilitate the capital raising through direct or dual listings. I have tried to break it up into what would be the benefit for an Indian company which has operations overseas versus a completely niche foreign company which has some operations in India. Currently, I believe that these are the two key companies, key type of issuers who are looking, and we receive most queries and questions from these issuers as to how they can leverage GIFT City. The ways and methods by which they can do it, I have tried to highlight here. But I would like to touch upon for an Indian company with operations overseas, why is it so important that he can do it so efficiently from GIFT City? He can access capital from strategic investors who are based overseas. As we saw in Arjunji's slide, the number of funds and the number of entities which have already set up in GIFT City are so huge, and they are all looking for investment opportunities. They can all be investors, they can all be anchor investors, or they can all be QIPs in these kind of issuances. So it is a big area there, a big advantage for these companies who are aspiring to raise money from GIFT City. For a company which has overseas operation, which is overseas but has operations in India, what is the main advantage? The company can tap Indian investors. We know that we have 20 million capital market investors in India. That can be easily accessed. The number of target UCCs in our platform has increased from a meager 3,000 a few years back to 65,000 plus as on today. So he has at least a 65,000 plus investor base already ready. Then mutual funds who are not allowed to list in Indian companies. But if it is a foreign company, the mutual fund also can invest in that issuance. So it offers a lot of advantages in terms of expanding the horizon of the types of investors that this particular issuer can tap easily and in a simplified way through GIFT City. Why GIFT City? We, as I have, spoken a lot about IFSCA, but the largest pie about why GIFT City is because of the light touch regulations. But I would like to say, having said that the regulations are light touch, it does not mean we compromise on regulations. It's just that we work so, the regulator has drafted the rules so seamlessly, keeping in mind so many other foreign jurisdictions and taken the best from each. And therefore, certain aspects which are not available in other foreign jurisdictions, such as if your issue size is less than 50 million, you don't need to go to the regulator to seek an approval. At the exchange level, that approval can be done. So what happens? That fast tracks the entire process. It expedites the process. As Sir has already shared, there is no minimum shareholder requirement. This particular, there are few companies which we were speaking to. They were extremely intrigued and they were extremely interested with the 10% promoter offloading and being able to be a listed company aspect. So those are the things, those are the features that are attracting the issuers to come to GIFT City. Various structures, as we said, it does not have to be a fresh fundraising. It can be an offer for sale by the existing promoter entities also. It can be in form of a dual listing also. It can be in form of a DR also. All these options are available. I think Sir has already touched upon this, but again, I have tried to highlight the main aspects which we thought that make it so easy and so compartmentalized in terms of preparing an offer document. Usually preparation of an offer document, submitting of offer document entails a lot of time and legal costs. But the ease of doing business that has been provided by IFSCA makes it very possible for the issuer himself to be involved with his existing legal team, his existing legal counselors, to prepare this document and make sure that they come up with a fantastic offer document. Sir has already covered this. I might not really get into too much detail of this, but yes, again, the flexibility and ease of doing business, that the offer period can be just 1 day. Disclosure requirements and reporting again has been kept very light touch. Essentially, it is not as granular as a listed issuer would have to comply with in the Indian market, in the Indian domestic market. Therefore, only the core aspects, which anyways any entity, which is a unlisted entity, which is now turning a listed entity, will have to comply as per good governance standards. Only those have been covered in the disclosure requirements. The key intermediaries required, according to what our analysis has been, that the lead managers play a very, very important role. So any issuer who is looking for exploring or considering a public issue has to have a good book lead manager for himself. Auditors, of course, the community present here will agree that they are the greatest pillars which any issuer would need to have their books of accounts in place to make sure that their offering circular carries the most accurate reports and records. The legal counsel, as I mentioned, because the job of the issuer does not start and end with just deciding that he wants to come out with an IPO and hiring these intermediaries. The job of the issuer only begins when the legal counsel starts coming up with the steps and carrying out the due diligence as to what all the issuer will have to do in order to come up with a successful issuance, and sponsor banks. Where do we come in play? We come in play after the issuer has concluded all his initial and preliminary work. He has all these pieces in terms of his ancillary services in place. He has his offering document ready. Of course, as an exchange, we play a core role in liaising with the issuer and their legal counsel and their bankers from day one. So on paper, we may say that only after he submits the offering document to us, our job begins, but that's not true. We start liaising with him, we start helping him. I would say we start marrying the demand and supply as to this will be needed, that will be needed. You have to liaise with XYZ, you have to take so and so exemption, you'll have to have this. So our job starts much, much before that. But finally and officially, only after his offering document is ready, our listing team reviews it. And if it is an issuance which is less than $50 million, the complete onus lies on the exchange. And therefore, with optimum governance, the exchange vets it. Our committee, we have a listing committee which reviews it, and only after that an issuer is given an in-principle approval. In-principle approval and the final listing stage is not a nuance. It is a very common aspect between the domestic market and what we follow here. What it allows the issuer to do is it gives him 12 months after receiving the in-principle approval to test the market and to actually launch the offer. After his offer is launched, his book is built, then for the final listing, the issuer approaches us and we provide them with an approval letter. The entire process, I would say, we don't only boast of being a sustainable finance hub. At IFSC, we are very green and sustainable. I would like to share that our entire listing department is paperless. We don't have a single hard copy. So all this process, whether it is for an Indian issuer or whether it is for a foreign issuer, happens online. We have an online portal through which all these documents are submitted to us. It is as seamless as that. These are just some timelines that I have tried to highlight because this question we often get asked this question that how much time will it take if I want to come up with an IPO, if I want to raise funds? Because all of us will agree, everybody's in a hurry. If the board thinks that yes, we should go and raise funds, uh, everybody wants it to happen as on yesterday. But it is a long drawn process. As I said, the job of the legal counsel starts. It takes at least a month. We have highlighted 3 weeks. It takes at least a month for the issuer to appoint the right set of intermediaries. And thereafter, with the role of the auditors, with the role of the legal counsel, with the role of collating all the information, I think it takes them about 8 weeks to actually come up with a decent and fair soft copy version of a DRHP. And thereafter, the process which follows is a very seamless process. As they say, the first step is the most difficult step, which is to appoint the right set of intermediaries, to give the right set of advice, and help the issuer to build a beautiful document which is so accurate that the exchange and the regulators have no choice but to give an approval to that issuer. So yes, all of us here playing role of some or the other intermediary are the most important pillar to any IPO which an issuer is wishing to launch. Value proposition, once again, I think sir has covered it, but very interesting. I would like to say all of us love hearing about the cost. So it's an analysis that we have done at NSE-IX that we at Gift City are the cheapest jurisdiction. The cost of raising funds is lower than any other international jurisdiction. We are 1/10 the cost of London. They are 1/10 the cost of Singapore. We are negligible the cost of Luxembourg Stock Exchange. And this is applicable not only for equity, but also for debt. So, as I said, the other aspects of the value proposition, sir had already covered, but the cost aspect is extremely important. That Gift City is the most commercially viable international jurisdiction currently. Our debt securities market, as we said, that it's the most vibrant market right now. We have an extremely efficient listing process. As I said, completely green. So we have from receiving an offer document and giving an in principle to listing, we have concluded within 6 days. That's the turnaround time that we provide. And every service which is availed from Gift City, such as procuring an ISIN number from IIDI to the foreign investor, whether it is a Canadian pension fund or whether it is a Taiwanese provident fund, the opening of the investor accounts in Gift City also has been a seamless process. The other very key advantage that our jurisdiction offers is that there is no minimum market capitalization. I would love for the audience to know that the smallest value of bond listed in Gift City is only $1.75 million, and we have a $1 billion issuance also. So that is the magnitude of that is the difference. There is no minimum market capitalization. Based on whatever the requirement of the issuer is, he can access the Gift City to raise these funds. The option to raise is there in multiple currencies. There are 14 currencies currently. So on our exchange itself, we have Singapore dollar bonds listed. We have US dollar bonds listed. We have yen bonds listed. So there are multiple currency. We have masala bonds listed. So it's, I would say the options are multiple. The other very important thing I would like to highlight is for the offering circular, the Ind AS, US GAAP, or the IFRS as applicable to the issuer is accepted. He does not have to comply with, or he does not have to get married to any one financial reporting methodology and incur extra time and cost to form a new financial statement just for making this issuance from Gift City. I've tried to highlight some key issuers who have raised funds from our stock exchange. As I said, we are very proud to onboard not only the largest bank in our country, but also a Sri Lankan bank recently, which has raised green bonds and listed on our stock exchange. So it's a multifarious set of investors that we cater to. Coming to the Sustainability Exchange platform, as I said, GIFT aspires to be the hub for sustainable finance. And therefore, given the IFSCA's seamless regulations, the easy and transparent ESG reporting disclosures that are available in the IFSCA guidelines, there are so many issuers who have accessed our platform to raise ESG labeled bonds. To give you examples, we have a sustainability linked bond from Adani Electricity, two green bonds of Adani Green or REC rather. There are issuers such as PFC and SBI also who have raised green bonds. We have social bonds raised by Shriram Transport. The options are many. And why would they choose and what would be the driving force for them to drop the foreign jurisdictions and come to GIFT City? Once again, I'm hitting to the point that the reporting and the entire process end to end, and also the post disclosure reporting is so seamless that it makes it possible for them to keep accessing GIFT City again and again. The number of issuers that we have who are repeat issuers is much, much larger. Not that new issuers are not tapping the market, but it is a one stop shop. Once they come and list at GIFT IFSC, they are so satisfied, and of course, as I said, they're commercially so much more viable that they drop the foreign stock exchange, which has been our observation over the last at least 2 years. So coming back to the point that I made, that fiscal advantage is not the only reason why an issuer or an investor would keep coming back to a certain jurisdiction. There are many other ease of doing business pillars which the jurisdiction provides. Well, just very briefly touching upon the point that I made about the outbound investment option that we have for resident Indian investors, I thought it would be good for me to share this slide since we have audience from all over. And I've tried to highlight some key features and what all is available on that platform. As we said, that our trading hours match the US trading hours and the non-US trading hours also, which makes it much, much more attractive. You would say that I can, under my LRS route, I can do it from here also. But in the domestic side, when you're doing it, you don't get access to the market for 22 and a half hours. And therefore, we have seen more and more participation. As I said, there are more and more informed investors. Our UCCs have gone from 3,000 to 65,000 plus over the last few years. And this outbound investment route of global stocks has really picked up by Indians for the LRS route. And the achievements that we have had so far are only going to be accelerated because we have a lot of other products on the way. I've just tried to share some equity listing. We are hopeful that we see some soon. There are multiple different sustainable products and transition finance and blended finance products, which you will see out of GIFT City in the days to come. REITs and WITs, GSEC bond indices, and IDRs, ETF listing. So, there are many, many more options. As I said, Make in India services is our only motto, and all of us at GIFT City are moving further with that particular thing in mind. I'll stop here, and as she shared, we'd be happy to take questions at the end of the session. Thank you so much.
Thank you for the insightful session, ma'am. I think a lot of things were already covered by Arjun sir, but still you made sure that you give a brief overview of everything. So I think that was great. Thank you so much. We'll be taking up the questions towards the end of the session. So I would request you to just be there throughout. And thank you so much. And now we'll move on to the next speaker, CA Amit Kumar Kedia, sir. I would like to briefly introduce sir to the members. So, Mr. Amit Kumar Kedia is a distinguished chartered accountant and a partner at the Gopal Sharma and Company, bringing over 17 years of experience in finance and consultancy services. His expertise spans multiple specialized domains, making him a valuable advisor in India's financial landscape. His core competencies are regulatory compliances in RERA, SEBI, and IFSCA Gift City. He is also a legal and dispute resolution person, competent in litigation and arbitration. He also deals with investment vehicles like AIFs, REITs, and SM REITs, and is a capital market expert. He also provides corporate services like forensic audits and due diligence. He is also an expert in the FEMA and the labor law compliances. He also has established himself as a leading authority in fundraising strategies across various financial products, providing strategic guidance to both entrepreneurs and established corporations. His guidance has been instrumental in numerous successful projects nationwide. As a passionate speaker, Mr. Kedia shares his insights at various industry events, demonstrating his commitment to fostering technology within the center. His primary focus is on fundraising and financial strategy, reflecting his dedication to supporting entrepreneurs and businesses in their growth journeys. I welcome you to this webinar, sir, and you can take it forward from here. I hope the members will be eager to know what you have to offer to us. So over to you.
Thank you, Sangni, and the Secretariat of the Committee of Financial and Investor Protection of our own ICAI for giving this opportunity. Thank you, our Chairman of the committee, CA Durgesh Kabra ji, and Vice Chairman, for bringing up this knowledgeable session for our members, where now the committee is not even working for the protection and listing of the securities in country, but now like through Gift City mode, they are going internationally. I would also thank for joining the chairman of Dubai chapter, Jaiprakash Agarwal ji, Madhur Gupta ji from Saudi chapter, Anuradha Saraf ji from Singapore chapter, Sri Krishnan ji from the Abu Dhabi chapter, last but not the least, Puneet ji from the Indonesia chapter. So, friends, from like 1.5, 2 hours, my situation is like my principal is there teaching to all of us. My class teacher is there, and now I need to speak in front of my class teacher, the principal, and my colleagues. So more like they have both covered very well in very detailed manner, where they have given an overview of what the gift city is, how the stock exchange itself is facilitating the direct listing. Now, like in this another 30 to 35 minutes, I would try to wrap it very quickly. I would be a bit fast. The regulation says much more, but what I would be trying to cover in this next 30, 35 minutes would be the opportunities which do exist with us as chartered accountants, as professionals, either being in India or being at any part of the world. How the I acknowledge your presence, Sri Krishnan ji from Abu Dhabi chapter.
Thank you, sir. Thank you.
So how like the opportunities of accounting services, how the services of bookkeeping, how the audit services could be given to these entities who are coming, who are present, not even in terms of getting them registered, getting them create their structure, but further for their compliance. That is one area. Another could be we as professional, how we can give services to the intermediaries which are present for the capital market. And if we are there, not in practice, but at any point of time, we are there in service to an organization which looks forward to tap international money, moreover, money from such a big population of the country of 146 crores, where the capital is available and how they can take an advantage of getting themselves listed. So this is how what we would be understanding. We would be like briefly going quickly with the very important definition. So I have not covered all the definition. I've just tried to capture those definitions which are the most important in terms of understanding these regulations and in terms of which are important in terms of the professional opportunity which we can take from it. So, as very well known to us, like the capital market intermediaries, the regulation have came and they have identified 11 odds intermediaries which are being covered as a capital market intermediaries, and they need to appoint the compliance officer who needs to report directly to the board. So again, this compliance officer is one of a very big opportunity for we as professionals, where we can give our services as a compliance officer by coming on board with these companies, because we are not like we are the best in terms of giving the legal or the regulatory compliances, where like we need to provide and give an understanding in regards how the books needs to be maintained, how the records are to be kept, what are the risk which is uh, there, how the compliances would be made, what are the policies that needs to be framed, and the implementation of all. So that could be an opportunity, and here where like is an understanding which is in terms of the compliance officer. In terms of control, we all very well know and understand how, in any of the entity, if the number of shareholding is more than 50%, may be controlled indirectly or directly or through connect, where like through the voting, then in those cases it would be termed as a control. So wherever we are understanding in terms of control, anything above 50% is and would be termed as a control. In terms of foreign jurisdiction, as told by Hetalji and Arjunji, uh, apart from India, all the jurisdiction would be the foreign jurisdiction. So if we are talking about any of the entity getting listed, any of the entity which are looking for this platform of gift direct listing, then all these jurisdiction would be captured. What needs to be seen is these foreign jurisdiction needs to have signed with the International Organization of Security Commission. That is what we need to see and understand if they are signed, and if it does not fall under the Financial Action Task Force country, then that would be uh, identified as a foreign jurisdiction for the understanding of this regulation. If we understand and know about the key managerial person, then the key managerial person would be the chief executive officer, the company secretary, the whole-time director, or the chief financial officer. They all would be covering as a key managerial person. Again, this is a important uh, professional opportunity where we can give our services as a key manager person being on board with the enterprise where we can give uh, these intermediaries as a role of ours as a key managerial person. In terms of net worth, there is a detailed bifurcation. There is a detailed summary. There is a separate annexure. We would be seeing that schedule later on in our presentation, where they have mentioned category-wise net worth, which needs to be maintained. Calculation of net worth, we all know it's like more or less similar. The most important part of this net worth here is that this net worth needs to be in a liquid form. So liquid, maybe in terms of cash, bank, or maybe the foreign security or the government bond or any other instrument which may be notified at a later given point of time, but it needs to be a liquid in a liquid form. Again, the very important definition, that is the principal officer. He would be the designated employee of the organization, which is the capital market intermediary, which is having the responsibility. That is, he would be having the overall responsibility of all the activities which are being done. Again, this principal office, being a principal office of any intermediary at a gift city, is again a professional opportunity where, like any professional among us can take an advantage of the same. As very well and told by Arjun ji and Hetal ji, like everything which is done at NSC or IFSCA is like streamless. That is all electronically, and so do goes with the registration also. So any intermediary looking forward for a registration, there is a single window system that is a very well designed, planned single window IT system which is there at the IFSCA, and through this process, intermediary can obtain its certificate of registration under these regulations. Moving forward, if we see who are the intermediaries who are registered, who are required to be registered, or which are the opportunities of these intermediaries, then these intermediaries like the broker dealer, clearing member, credit rating agency, any custodian, debenture trustee, depository participants, distributor, ESG rated ratings, data products company, investment advisors, investment bankers, research equity. These are the intermediaries. And friends, these intermediaries, as we have understood in our previous definition, they are not from any specific country. As we have seen in the definition, foreign jurisdiction. So, any of these entities which look forward to set up their shop at Gift City across the world, across the jurisdiction which are eligible, can come and get themselves registered and can do and start their operations. So you can see how wide, how big the opportunity is. If any of an entity, say from Sri Lanka, who is a broker, can get himself registered at Gift City and then can do business across the world, or say any of the distributor who is sitting a jurisdiction like Dubai can open their shop at GIFT and then can do its distribution service across the world. As very well told by Arjun Prasad ji, the benefit of the taxation which would be there would be available to these all entities. 10 years, no taxes out of 15 years is a big tax saving for any of an entity. Apart from that, they are getting exposure to the world. They are getting the most cost efficient manpower along with the cost efficient real estate. So why anybody would not love to be there in this jurisdiction of GIFT IFSCA? Some of the advisors who are like exempted from getting themselves registered could be like the people who are giving general comments, not very specific, but a comment which is sort of a general one. The insurance agents, the distributors of funds, members of Institute of Chartered Accountants, company secretary, cost accountants, broker dealers, fund managers, investment advisors who are just giving the advice on the investments and they are registered as an advisor to the authority, they all would not be required to get themselves registered. As told previously, a very seamless process of getting oneself registered with the authority. The portal, you need to just put the documents in an electronic manner where the documents would be submitted to the authority. There would be requisite fees which needs to be paid by the entity. So every entity needs to pay like two different categories of fees. One is a registration fee, second is an annual fee. So there is a detailed chart which is there from which like we can see the fees. Today, like I have not covered that fee part. Any additional norms which is required to be complied, then that could be done and taken care of. In terms of the entity, the legal formation, then these entities needs to be present in IFSC. That is a very important aspect that we need to know, and it needs to be in a legal structure like a company or an LLP or a body corporate or like a branch of the mother entity which is there at any part of the world, any jurisdiction which is an eligible jurisdiction. And this certificate is a perpetual certificate. So it is not having any life like in terms of like any number of years or so. It's a perpetual certificate which is being granted by the authority. But in case this certificate has been suspended by the authority, then in that case, it would not be continued, else this certificate would be having a perpetual life. One more thing, like it was just in yesterday newspaper or day before yesterday newspaper where I was going through the government and the IFSC authority are trying that this tax exemption may be risen to 25 years. That is, they are taking a target of 2047. So might be in time to come, we may hear that IFSCA is having a tax exemption of 25 years. What we are talking today is 10 years, maybe risen to 25 years. It's a newspaper article thing, but it happens. It would be a game changer, not even for the country, but for the world, where the world would be getting a jurisdiction which would be absolutely tax free. And this time. So these are the net worth requirements of the specific intermediaries which are to be registered. So if we say about the credit rating agency, they need to have a net worth of US dollars uh, uh, 2 lakhs. If we talk about like the investment advisors, $25,000, or an investment banker, $1 lakh. So these are like some of the net worth criteria which needs to be maintained by these entities. There is one thing which is very important, that this net worth uh, requirement is to be maintained. If in case of a branch, then it needs to be maintained at the parent level. So the parent can keep this network, they can earmark this network for their branch, and that would going to suffice the purpose. So in addition, if any intermediaries of like combined together of custodian or depository, they, if we see that they need to maintain a network, then the highest network in that aspect needs to be maintained by it. In those circumstances, it would not be that separate network would be required to be maintained by such intermediary. Moving forward, this is the biggest and the most I would going to say the first most important slide, which is creating a professional opportunity apart from like uh, being an auditor or like create for the structuring, being a principal officer or a compliance officer. Here, it is mandatory for an intermediaries to have a principal officer and a compliance officer. And these officers needs to be based out of IFSC. So you can imagine and understand, like in time to come when so many of the entities would be getting registered, so many of the entities in multiple permutation combination would be there present at IFSCA. Every entity would be requiring with the principal officer and the compliance officer, and how big the opportunity gets created. So it would not be like the only local entities or say the international entities, the big brokering houses across the world, big custodian across the world would be coming and would be presenting, and they would be requiring a thorough professional who would be there to manage as a principal officer or a compliance officer. So there are these are like some of the qualifications which are required. So any qualifications like Institute of Chartered Accountant, Company Secretary, or Cost Accountant, or like equivalent would going to suffice the purpose in regards of the principal officer or the compliance officer, which is required to be there in terms of these entities. So in terms of the experience which is required in regards of the principal officer, at least 3 years financial experience from financial services would be required. In case there are experience which is required in terms of the ESG related activities, then it needs to be for like 1 year. And for the compliance officer, it needs to be 2 years in the financial services. So in terms of like there are multiple registrations which are there, then there need to be a separate principal officer that needs to be required to be present. And in terms of a broker dealer, So if services like broker dealer, clearing member, depository participants, they all have been taken by any of the intermediary, then in that case, a single principal officer can be appointed for the entity. In that case, like multiple principal officer would be exempted. So that is very specific to what have been given for these three specific intermediaries. This have been like dealt with by Hetulji, where like these would be the documents what would be required at the time of putting up the prospectus. But these documents would be required and to be maintained by all these listed intermediaries. Now, here the importance of we as professional comes. These documents like the balance sheet, profit and loss account, audit report, accounts that are required, which have been opened, or any of the activities of these capital market, they cannot be maintained by without the assistance, without the professional guidelines, which needs to be provided by the professional to the entity. So these would be the informations which would be required, and these informations needs to be there in case any material change have happened, or there is any change in regards of any principal officer or compliance officer. The uh, information should be reached within 15 days if any of these change to happen. Then, in terms of the compliance of the annual compliance, which is required, we as professionals would be required, and if any of the equivalent profession across these foreign jurisdictions are also there, they can also participate in the compliance of the entity. And these submission timelines would again be like the 30th of September, which needs to be taken care. There are some obligations and responsibilities which needs to be seen in terms of the credit rating agency. They needs to see that every document have been written, the agreements have been written. There needs to be seen that if there is any withdrawal for in regards of any of the amalgamation, or like non-payment of fee, or any of the rating services which is not there available, then in those cases they can withdraw, else they would not be able to withdraw, and that disclosures needs to be given to the stock exchanges on timely basis. Again, the custodian would be having its responsibility of reviewing, monitoring mechanism. Agreements needs to be in writing. The securities which are permitted for these financial products, then their detailed terms needs to be there with them. In terms of debenture trustees, again, they would be seen that they should not be associated with the issuer. They need to report on a periodical basis. They need to clarify, they need to put in place the terms of the issuer. They need to see that the reporting, how the funds have been utilized, that needs to be seen. In addition, they need to have the possession of the property also, which is being dealt with as a issuer. Depository participants would be required to maintain the data which is there. In terms of distribution, as I was telling, the distribution could be carried for Indian, for IFSCA, or for any of the foreign jurisdiction. So again, this makes a very important sector for somebody coming and taking this IFSC jurisdiction for their distribution activities. In terms of the product of the ESG ratings, they needs to cover the principles which are in terms of the good governance, the transparency they need to follow in terms of the confidentiality, the engagements, which are the system control, and how they would be carrying that needs to be taken care and understood. In terms of the disclosure requirement by the investment advisors, they need to disclose in terms of what are the holdings, what are the positions, any material fact which they need to tell to their client, any historical, any business details. They all needs to be very transparent, very clear in terms of their investment advice, which have been given by these investment advice. Again, a very important aspect that is like the investment banker who is there, who would be going through all the agreements which are there, as told by Hetalji very in very detail. The investment banker plays a very important role. So now, investment banker across the jurisdiction can look forward for this gift IFSCA intermediary regulation as an opportunity to get themselves registered here and do an international business, not for the IFSCA itself, but for like if they want to do their business across the world, taking IFSC as the base, they can take this as an opportunity. What needs to be seen at the investment banker side, the most important thing is whatever net worth criteria they are been maintaining in, they cannot do an underwriting more than 20 times of the net worth which they are having. That is like one important aspect they need to take care. There is a code of conduct which needs to be seen and followed by the intermediaries. There needs to be working in the interest of the investors. There needs to be professional. There needs to be ethical. There needs to do all the due diligence. Any timeline they needs to follow. They needs to check that they are following those timelines, and they should not fall in any of the fall practice like an insider trading or any manipulative or fraudulent trading or any creation of a false market, price rigging, any like publication of any of the price sensitive information that needs to be taken care. Undoubtedly, the IFSC regulation are very simple. They are very easy to be adopted, very simplified written, but then also the code of conduct needs to be followed and work needs to be done under those ambits only. So thank you each and every participant for giving this opportunity, and now we look forward to participate for the question answer session along with Arjun Prasadji and Hetal Kotaji. Thank you very much.
Thank you for your inputs on the topic, sir. I would like to, before moving on to the Q&A session, I would like to introduce our chairpersons from the foreign chapters. We have CA Jaiprakash Agarwal, sir, from the Dubai chapter of ICI. And we also have CA Krishnan, sir, from the Abu Dhabi chapter with us.
Hello.
We have, hello, sir. We have Anuradha Shroff, CA Anuradha Shroff from the Singapore chapter of ICI as well. And we have CA Puneet Bakshi, sir, from the Indonesia chapter.
Hello.
And we also have CA Madhur Gupta, sir, from the Riyadh chapter of ICI. So
Wow.
I welcome you all to the webinar, and I'm sure there is a time difference also as well. So I really appreciate all of you being here. on this at this time. So I would like to firstly move on to CA Jayaprakash sir from the Dubai chapter to
Hello.
give a few words to us regarding the session. Over to you, sir.
Thank you. Thank you very much. I love the initiative which has been taken up. Just give me a second. Yeah, sorry. I love the initiative. Gift City is, yes. I mean, I heard uh, Miss Hetal as well as Amit Bhai, I heard, and I was sorry I was a little late, but love the part that yes, India is bringing services global to India. India is actually going global. और जो बोल रहे हैं ना कि अगली सदी भारत की है. So services plays an important role in making India the leader in everything, and financial services, the Gift City is actually a gift for all the Indians. uh, Sitting in Dubai, I feel proud of Gift City, and we try to bring in funds to India. We try to infuse more capital in India, because now at least we can say yes, we also have platform where you can, and it's a single window. Lovely thing is, Hetalji, what you said is single window. This single window actually helps to go to NRIs, to go to the locals and say, let's go and invest in India. You can make money out of India because returns are really good. Make in India is working well, and it is a single window clearance. You are not getting trouble of going to different regulators. So we are with you. And from UAE perspective, I can say on behalf of Krishan Bhai as well, sitting 100 kilometers apart from each other, that as UAE, we are with you on whatever Gift City needs support, India needs support. We are always there with you, and happy to answer any queries, any questions, and address any of the concerns which you all have from UAE perspective. Thank you.
Thank you, sir, for being here with us. And I would like to move on to CA Krishnan, sir, who is the chairman of the Abu Dhabi chapter. I welcome you to the webinar, sir, and would love to hear from you now.
Good evening, everyone. Thanks for connecting with us. It's a great initiative which has been taken by the Committee of Financial Market and Investor Protection. As James mentioned, yeah, it is what much needed. And being Indian, being an investor, most of people who are investing in India, most of us are investing in India. Always when we are investing, we are always thinking about of rupee depreciation, tax, all those things. Gift City provides so much of relief with regarding to the tax, with regarding to the dollar protection and the on the tax holidays and all. It's a great initiative, and thanks to Sanjani Singhal and CA Durgesh and CA the Energy to to organize such an event. Only one thing which in fact I was hearing Mr. Amit Kumar Kedia, which he was talking about the various regulatory framework and with regarding to the exemptions and registration. So it's a really eye-opening for us. In fact, quite a lot of informative which has been shared, which will be very interesting. Only one thing which I request the committee is, okay, if you can organize the event on a weekends, that will be much better than doing it on a weekday, because most of the people are working in an organization, coming out of that on a weekdays. It will be very difficult for the people, because many of the members, when we sent a circle, they said 5 to 8 o'clock. It is they are all working in an organization, right? So it will be very difficult for them to attend the meeting. What I request is this information. This should be done on a weekend, which will attract more people, because this requires a lot of knowledge. This requires quite a lot of educative information is required to be shared with all the members of across the globe. So it will be better if you can do it on a weekend.
Definitely,
Thank you once again
sir.
for taking that initiative. This is only a starting. We'll be doing more and more events in the near future.
Yes, sir. Definitely, sir. This is duly noted. I will definitely take it up with the committee, and we'll definitely do the additional sessions on the weekends. Definitely.
Thank you.
Thank you so much for your inputs. I would like to move on to CA Anuradha Shroff now, who is the chairperson of the Singapore chapter of ICI. It's already very late for her, I believe. So, a few words from you, ma'am.
Thank you so much. Yes, it's late, but yeah, I'm not sleeping yet. It's just 10 p.m. in Singapore. So not a relatively bad time. Very good evening to all the esteemed speakers and my fellow co-chairpersons. It was really a very insightful and exciting session to hear Arjunji, Hetalji, and Amitji. Amitji and I have been on a seminar before together as well. So it was nice to hear. Gift City, I guess, is definitely leaving its own landmark. People in Singapore, specifically, whenever there are roadshows, members are really interested to know more about gift cities. And specifically, very recently, we've been finding out that in Singapore, there's an influx of family offices in Singapore. So one of the things that we are trying to, figure out is how some of those could be moved towards the gift city. So the purpose with it, with which this whole setup has been done. So that is as chartered accountants in Singapore, we are working with ICI India as well to see how we can, do something different and see how we can garner more interest because so yes, we have to carry forward the good work. And, as we enlighten our members, we should do more around how we can work for the nation sitting far away. So largely, I would say is, I like to say this as Gift City is not a project, it's a transformation platform with India saying to the world, we are ready not just to participate, but to lead. And thank you for the committee to giving us a chance to represent our various chapters from Singapore. Thank you.
Thank you for your wise words, ma'am. And I would now like to move on to CA Madhur Gupta, who is the chairman of the Riyadh chapter of ICI. I welcome you to the webinar, sir. Over to you.
Thank you. Thank you for giving me the opportunity to be a part of this session. I'm grateful to the speakers for this excellent and informative presentation. And thank you for all for joining today's insightful webinar on Gift City. We hope that this session has helped everyone to understand the tremendous opportunity that Gift City offers. On behalf of Saudi chapter, we would also like to share a few of our perspective that India is Saudi's second largest trading partner and a major consumer also of petrochemicals, oils, IT services, and many more. And India-Saudi Arabia trade ties are growing rapidly. For Saudi-based companies with Indian connections such as Lulu Groups and many more who are working in Saudi Arabia also, it would be more favorable to list on Gift City compared to any other stock exchange. So therefore, we will encourage our CA members to consider these points and explore the new opportunities at their respective companies that intended to pursue a stock exchange listing. Other than this, we have just two, you can say, theory or thing that why Saudi Riyal is not included in as a working currency. Considering that the Saudi Arabia is one of the biggest business partner, we intended to raise this issue through the proper channel also. One more point I would like to highlight that chartered accountants working abroad, there is a significant opportunity for them to act as a consultant by bridging the gap between the local listing requirements and those of the gift city, as many foreign companies may find it challenging to understand the listing framework of the gift city. So these professionals can play a key role in the guiding them through the process and highlighting the associate benefits. Once again, I would like to thank ICI for organizing these events, which are greatly highly beneficial for the foreign chapters also. Thank you.
Thank you so much, sir. And duly noted the points that you have highlighted. And we would now move on to the next chairman, last but not the least, CA Puneet Bakshi, sir, who is the chairman of the Chakrata chapter of Indonesia of ICI. I welcome you to the webinar, sir. Over to you.
Thanks everyone. Thanks the panel member for inviting us. It's been a great opportunity for me because I am the first time I am hearing about Gift City and the opportunities for us as an investors and also for the corporates for which we are working for in Indonesia as well. So as far as Indonesia is concerned, Indonesia is the biggest palm oil exporter to India. And India is the biggest, importer from Indonesia as well. So if we look from the business perspective, I think it's a great opportunity And we being here in Indonesia could be the brand ambassador of Gift City in this country to socialize the ease, the easiness of the business, how the India is, going so fast in the growth is so fast over there in India, and how the corporates in Indonesia can benefit from that opportunity, from the growth opportunity in India as well. Though there is not much, I would say, the relationship other than the palm oil business, or maybe to some extent, other commodities, the coal over here. But yes, it has given us a platform, a big platform to all of us here in Indonesia. If not to socialize to the corporates, at least we can become the retail investors as a retail investors in the Gift City. I'm sure Indonesian investors will be very much interested into this thing, because Indonesia actually follows the concept of global taxation, and it's a good opportunity to see that what's there in the Gift City, uh, to I would say to plan their tax liabilities here in Indonesia as an investor, as a retail investors. So again, it's a great opportunity, and I would say, I mean, for us, it's become a responsibility for us to also socialize this thing in the country we are living in. Thanks again to the panel members. Thank you so much.
Thank you for your input, sir. Thank you, in fact, to all the chairpersons present here from the foreign chapters. And I would like to now move on to the Q&A session with the speakers. And I welcome all the chairpersons also. In case you feel like answering any of the questions, we'd be happy to hear the answers from you. So my first question is to Arjun sir. Sir, can IFSC entity freely repatriate profit or funds to home jurisdictions?
Yeah, so there are no restrictions. So when you mean by home, is it India or other country? If it is between IFSC and foreign country, there are no restrictions at all. If it is between IFSC and India, it will apply as if it is coming from a foreign jurisdiction to India. So all the RBI norms will apply for such repatriation.
Okay, thank you, sir. My next question is to Hetal ma'am. If a company listed on any exchange in IFSC is also required to list in domestic exchange or not?
No, that's the beauty of a direct listing. Because if you see what Honorable Finance Minister has said, direct listing. So that means if you are listed on any one of the permissible jurisdictions, of which IFSC is one of them, you don't need to list on the domestic stock exchanges. That's the beauty of this guideline.
Can I add here?
Of course, sir.
Yeah.
Definitely.
So there is no mandatory requirement. So if any company wants to do an
Yeah.
IPO, they can directly come to the IFSC exchanges. They can come and do an equity listing and IPO. So that is very clear in the law. But we are working with SEBI on how dual listing will work, which means a company which is a listed company, they can list here. So there we are working on three aspects. Company which is already listed in India, they can do a listing in IFSC. Companies which are unlisted, but they want to do an IPO on both the markets, the domestic exchanges and IFSC exchanges. And the third piece is if the company has listed on IFSC exchanges, but later on decides to do a listing on the domestic exchanges, that also we are working with SEBI. But as of now, this is something which we are having discussions. It is not yet enabled, but in the coming months, we hope the rules will come into place.
Right, sir. Thank you. My next question is to Amit Kedia, sir. So the question is, if an entity desires to undertake activities of more than single intermediary is required net worth for each activity separately?
So basically, there are some activities which can be consolidated as I've tried to tell in the presentation, like activities like custodian, depository. There are 4 or 5 activities. If they are going together, then in those cases, the highest net worth would be required to be maintained. So, for example, if there are four separate intermediaries activities, one is required $25,000, one is requiring $50,000, and one is like say $1 lakh, and the last one say $1.5 lakh. There are just examples. So all these four activities could be done by the entity, and the highest net worth, which is 1,50,000, it's to be required to be maintained. In case the authority comes with a separate maintenance of net worth for any of these four specific intermediaries taken in the example, then in that case, that needs to be maintained separate. Hetal ji and Arjun ji can correct me if there is any gap.
That's right.
This is, I think, this is the requirement in the regulation. So it is the highest of all the categories as of now in the regulations.
Right. Thank you, sir. My next question is for Hetal ma'am again. Ma'am, is there any additional requirement in case of dual listing of Indian public company?
So for dual listing of Indian public companies, as Arjun Ji has just clarified, IFSCA is working day and night, I think, with the counterparts in domestic India, which is SEBI, to come out with combined regulations. Because see, the ethos of that company would be that it is listed in home jurisdiction, which is India. And therefore, it will have to comply with the SEBI norms also. And therefore, IFSCA and SEBI are working to ensure that all the regulations of SEBI are taken care of while this company is either duly listing or raising fresh capital from GIFT City.
Right. Thank you, ma'am. My next question is for Arjun sir. The next question is GST registration required or not if an entity registered in the IFSC deals with only foreign clients?
So I think they are required, but I'm not very sure because it's not something which IFSCA law applies. This is again a different law. So I'm not very sure if Amitji, I'm not sure whether you can answer this, or otherwise what I believe they are required, but I'm not sure on this part.
It applies, sir. It applies. Other than us receiving our salaries and all these aspects, we are foreign. But yes, it applies to answer your question, ma'am. Amitji can correct me if I'm wrong.
No. So as told, like I'm sitting in front of my principal and my class teacher. So saying above them would anything be wrong? So yes, absolutely correct.
Right, sir. So my next question is for Amit sir, and I urge all the chairpersons also, in case you want to give any inputs and any answers, any additional comments, please feel free to give them.
You need to understand, principal is already there, teacher is also there, right? Student is also there. Now we are novice. It will be difficult for us to pitch in, but we will try our best.
We are the
Right.
students.
There is a
Please go ahead.
question
Sorry.
in the chat window that I would like to answer, which asks whether a company needs to set up a subsidiary in IFSC for being able to raise such funds. It's a very valid and pertinent question. I'm glad whoever has asked it because we all have missed covering that. However, the answer to that is no. Currently, there are so many institutions who are raising funds out of IFSC. IFSCA has not mandated any of them to set up a company or a subsidiary out of GIFT City only for the purpose of fundraising. So your physical presence in GIFT City or your domicile per se does not have to change just because you are raising funds from GIFT City. It's a very valid question. We thank the person who has asked the question because it's important for them to know that.
Right. Thank you so much. We have another question in the chat box. I would like to just point it out. The question is, as auditing company in Dubai, we can also register in GIFT City to provide consultancy and auditing services.
Goes to
Can
Amit
that
Bhai
be
because
done?
he said.
Yeah.
Amit,
We have a regulation, BATF, bookkeeping, accounting, auditing, tax, and there is one more on financial crime. So if they're providing any of these services, they can set up here. And the interesting part is this is one regulation where the entity which is set up here, they can provide services to any sector. It can be manufacturing, chemicals, any sector. It need not be financial services. If they're into these 4 or 5 services, it can be provided from Gift City.
What is the average cost of setup, if I may ask, for setting up a auditing firm in Gift City?
So one is, the cost of setting up, it's low compared to the other jurisdictions, but I may not be able to comment on the exact cost, but it depends on the number of people. You need to, how many spaces you are taking. So this depends on various factors, but the cost of employing people, because we also get salary in rupee only. So that is all cost is very low. So it's very less compared to some of the other markets.
Thank you. Thanks a lot.
Just to add on, some points, ancillary services is like one area where like the professionals can get themselves registered, where like they would be able to give the accounting, taxation, auditing services. So it is like more or less similar to like any of the chartered accountant firm which is there in India or any part of the world opening a branch office at Gift City. So all the activities which a chartered accountant firm is doing across the globe can do similarly. Two important thing, that branch would be again be getting an exemption of 10 years tax holiday out of the 15 years consecutive, any 10 years consecutive out of the 15 years. And in addition, very well said by Arjunji, the money, the salary would be given in say in terms of rupee. So again, there would be a cost effective manpower, a human resource which would be available, along with a cost-effective real estate which is not costly. In terms of registration, the registration would not going to be more than $4,000, around around that $4,500. All the registration process would be done, and effectively, if two-seater, three-seater is being taken, the cost would not going to raise by like a fixed cost of more than 1 lakh would not be incurred in terms of a variable one. So yeah, I think.
Thank you. That gives more clarity. Thank you very much. Please go ahead.
Thank you, sir. We have another question for Amit sir. The question is, so you've touched upon professional opportunities for the members. So the question is, if an NRI wishes to provide professional services in individual capacity like a freelancer, what will be the income tax implications for him?
Can you please come again with the question?
Definitely. The question is, if an NRI wishes to provide professional services in individual capacity like a freelancer, what will be the income tax implications for him?
No, so basically, nobody could be able to come as a freelancer financial, like he needs a financial advisor or sort of, he needs to come in any of the financial service activities which are being given at the IFSC authority. Maybe he could be an advisor, he can come as if he's a professional, he can come as ancillary service or a bookkeeping accounting services. So prima facie, he needs to get himself registered. And in terms of taxation, like again, the taxation would be the same. It would be like 10 years tax-free holiday out of the 15 years. That is 10 consecutive years he may adopt for getting himself exempted. So how it works, just for his for like benefit of all our members participating, if somebody chooses after 3 years they want to go for a tax holiday, so 3 plus 10, that would be the period they would be getting the tax benefit. So if somebody thinks like first 2 years I would not be able to earn much, or my taxation would not be there, because like whatever I have earning, whatever is my turnover would going to go in my expenditure, then it could be adopted that from third year they can adopt. And as told in my presentation also, like now, like the authority and the government of India is thinking to take it to 25 years. So it was a newspaper article just 2 or 3 days.
Right. Thank you, sir. I hope the member the answer has been questioned. The question has been answered. You've got the answer to the question.
Sorry to disturb you, Amitji. Thank you for the explanation. So on this question, you are talking about the individual can be a investment advisor, right? With a net worth of $25,000. For example, any member being a professional can be an investment advisor. So for that, is there any regulatory requirement, or straight away we can register in the GIFT City and being an investment advisor?
Sorry, I interrupted you in between. So for investment advisor, the professional are exempted for getting themselves registered.
Okay.
Yeah.
So we
if
can
I
register as
add
a
here,
as an investment advisor.
Can I add here?
Yeah, please.
Yeah, so we are having our new regulations on capital market intermediaries. So that covers investment advisors as well. But here, this is different from SEBI because here for any registration, you need two approvals. One is IFSCA approval. The other is a unit approval under the SEZ Act. So there are two approvals which have been delegated to Administrator IFSCA. So what we have said in our regulations is if somebody wants to set up here for any capital market intermediaries, they need to come in a body corporate structure, either company or body corporate or LLP. So as an individual, he cannot come here because he cannot set up an unit. He needs to form some LLP structure. And once he forms an LLP structure, then he can register as an investment advisor and then he can provide services.
Okay.
And he will get all the tax benefits, everything that he can do. And Amitji is right. There is an exemption also if somebody who doesn't want to take a registration, but it is an incidental service which is providing, advice is providing as a CA firm or as a CS firm, then those are exempted. But somebody wants to take registration, this is the process.
Okay, another question related to this, slightly related to this. For example, so we are talking about the creditor exemptions as per the DTAA, which has been between Singapore or UAE and India. For to get the exemption, whether the TRC certificate is required from the respective countries or based on the NRI status, straight away we'll be able to get an exemption.
Sorry, I am not sure on this. What is the exact question?
Tax residency certificate. Do you need a tax residency certificate to get the exemption, or otherwise we can get the exemption based on the straightaway NRI status?
Okay, I'm not aware because this is again taxation law. I'm not very fully familiar with the taxation law, but I can get back to the team which handles taxation related matters in IFSCA, and I can get it clarified.
Okay, thank you.
Can I like just try to put what I have understood from the question is like somebody NRI doing having a setup at GIFT.
No, as an investor, basically I am as an investor investing in GIFT City products. Say basically I am investing in a AIF, alternative investment fund, which is a minimum requirement of $150,000. For that, when I am getting a credit, when I am withdrawing the funds, whether I have to provide a TRC certificate to get the exemptions or the credit, or otherwise straight away based on the NRI status, I'll get the credit.
So, to the best of my understanding and knowledge, we would be 100% exempted. So there would be no taxation which would be arising. So there would be no deductions which would be happening. If there are like no deduction, then claiming of that would not be required.
I'd also just like to give a little added from the exchange perspective. What we've observed is, sir, all these things are taken care of when you're registering. See, as an NRI, when you're trading on the exchange or when you're exploring participating in the GIFT City ecosystem, you have to register with a broker who in turn will tie up with a clearing member who in turn will do your trades or put your trade on the stock exchange. And therefore, when that KYC takes place, to the best of my knowledge, these documents are supposed to be a one-time confirmation to be given to such a trading member. That is my belief.
Thank you, ma'am. The next question is for Hetal ma'am again. So the question is, in case of a dual listing of Indian company, is it required to submit reports and compliances with both the regulators and exchanges of both the places?
Very good question again. This is one of the norms which we follow under ease of doing business. As a 100% subsidiary of our parent, if the company, when you're saying dual listed, that means the company is already listed on NSE India and then they are listing on NSE IX. They do not have to give any additional ongoing compliances. We have a channel which has been built with NSE, our parent, and therefore all the financials, of course, financials, irrespective of whether he's submitting to IFSCA or whether he's submitting to SEBI, are going to remain the same. Record dates are going to remain the same. Material information, price sensitive information, change in credit rating, board meeting approval, agendas, all that is going to remain the same. Therefore, to avoid duplication, we have built this pipe with our parent, and therefore there is no dual reporting that the issuer who is listing on NSE IX will have to do if he is listed on my parent. It's a very successful model already being followed in the debt. So REC, IRFC, PFC, Adani, Renew Power, all of them don't do any additional disclosures at GIFT City other than it being a foreign currency bond specific disclosure. It all is taken from NSE India.
Thank you, ma'am. The next question is for Arjun sir. The question is, what is the eligibility requirement for key managerial personnel in case of fund management entities?
So we have detailed requirements. One is on the experience side, the other is on the qualification side. So qualification we have, CA, CS, and other like MBA and other MBA and other courses which are detailed down in the regulations. And then there is an experience of certain years, for example, 5 years in certain activities, and that have been already been provided in the regulations. In fact, very recently we have come out with detailed guidance also, very detailed circular on the qualification and experience requirements for principal officer and compliance officer.
Thank you, sir. The next question is for Amit Kedia, sir. So the question is, what additional requirements are there for a broker dealer if he wants to deal with the foreign securities?
This is a bit like, I think I would pass this question to Arjun ji if comfortable, and like I would try.
Yeah, sure. So I think this is a very interesting question. So we are working on global access. So this is goes way back to 2021. So there was a request from broker dealers that since at that point of time there were very limited products on the exchanges. So we have derivatives, and so the brokers asked for allowing them to provide access to global markets. So we came out with a circular, and we have allowed brokers to trade in global markets, whether it is US, Europe, or Hong Kong, Singapore, they can do through a tie-up with a foreign broker. So what happens, a broker set up in IFSC, they will have an introducing broker kind of arrangement with a foreign broker, say Interactive or any other broker, and that broker provides access to various global markets. So this was permitted in 2021, and based on experiences and some of the recent observations, what we have seen, we are in the process of revising the entire norms for global access. In fact, it was in May, we have released consultation papers 2 times, and the revised consultation paper was released on May 30, where we are completely changing the norms for global access. So what will happen in the revised consultation paper which we have proposed, broker can do 2 activities. One is they can do on the prop book, where they can do, huge HFT trading or arbitrage between exchanges. That is also permitted. And brokers can also do a clientele trading, where many brokers They provide access to retail investors through LRS to access US market, as well as there are many brokers who want to set up Gift City as the hub for not just India, but for the Middle East, for Australia, from other countries. They will have investors come here, and from here they will access US market. So that is also happening, and very soon we'll be seeing a detailed circular on this.
Right. Thank you. Now we move on to the next question, which is for Hetal ma'am. The question is, can Indian investors invest in companies listed on an IFSC exchange?
Indian investors are allowed to list only on stocks of foreign companies, not of Indian companies. We'd like to clarify here that IFSC, as we began with saying, is a premise for trading or for indulging in transactions which you would have otherwise done overseas. What you can do within the shores of India, we don't compete with that. We are an offshore jurisdiction, and therefore only what you cannot do in India, you can do in IFSC. We do not, we have a very clear-cut demarcation with that. So therefore, an Indian issuer cannot invest in an Indian company if he is raising money from IFSC. He can very well invest in that company on BSE and SE also.
So if I can add, I mean here, so if an
Sure.
Indian investor, they want to invest on NSE platform, there are certain products like unsponsored DR on US
Of course,
stocks,
of course.
which Hetalji
Of course.
mentioned, they can invest in Apple or those US products. If it comes to LRS, they cannot invest in any derivatives. So Nifty futures, they cannot invest any derivatives. So it's a margin-based product, leverage-based product, which is not permitted under LRS. So whenever foreign company lists here, equity listing, they can invest. So those LRS norms will apply.
Correct.
Right. We move on to the last question now. This is for Amit Kedia, sir. The question is, what additional requirements are there for a broker dealer if he wants to deal with foreign securities? And another question is an intermediary allowed to appoint same key persons as appointed in domestic jurisdictions?
The second one is easy, so I take that first. And for the second question, first question, I will be requiring Arjun sir help. So
I think first question we have already answered. So that's on global access. Yeah.
Yeah. I think to add on, I think we need to take that jurisdiction also into account where like he wants to access. So somebody getting himself registered at IFSCA wants to do in global access, want to do access in US market, then those regulations also he needs to take care. I think this is like what I guess. Coming to your second question, so the principal and the compliance officer needs to be separate. So they need to be based out of GIFT IFSC. So I might be having my activities in say Mumbai or say US or Dubai, three places, but I need to keep separate principal officer and compliance for the GIFT IFSC. If like anything to be corrected, please.
Yeah, no, this is exactly the position. In fact, we are very serious on this. There's something substance requirement is very important. We don't want to set up just a cell company here. So the expectation is that the principal officer, compliance officer, and the necessary manpower which is required for doing services, they are actually based in IFSC and they enjoy tax benefits also. So that is something which regulator is very keen. In fact, recently we have issued a press release where we saw non-compliance by some of the entities, and we have initiated some enforcement action also against 9 entities. There is a press release also. So that is something which is very essential for building substance here.
Right.
So can I comment on one interesting
Definitely,
discussion
sir.
we had
Please go ahead.
on, first of all, I would like to thank ICI and heads from chairs from all the chapters they have joined here. So there were a few interesting remarks I have noted. So I have noted from Saudi Arabia the inclusion of currencies. I'll give a feedback to the banking team because this is being handled by them as list of specified currencies for dealing here. There is an interesting discussion on crude palm oil. So that is something I remember 1 or 2 years back, I was having discussion with stock exchanges and crude palm oil. We are one of the largest importers, probably the largest importers in the world. And most of these imports take place from Indonesia and Malaysia. So we have tried a lot to work on this. The only problem is we have one leg of the liquidity, which is the importers. The other leg is, it is in Indonesia and Malaysia, but we'll be happy to reinitiate the discussions. We'll check with the exchanges and we'll see the possibility of introducing some products on crude palm oil derivatives. That is the futures market, option market on this. So that people who are importing crude palm oil in India, they can use our platform for their hedging instead of going to Malaysian exchanges or other exchanges for hedging their risks on this. So this is a very important discussion which I have noted.
Thank
Thanks,
you.
Arjun sir, for taking my point. Thanks a lot.
Right. So with this, we come to the end of the session. And I would really appreciate all of you taking out time, especially the forum chapter chairpersons, for taking out their time to attend this webinar and, just grace us with their presence. I would like to thank the speakers, Arjun sir, Amit sir, Hetal ma'am, for imparting such words of wisdom for the members. It was I really appreciate the session, and it was really insightful. The webinar was very engaging, and thank you for providing the clarity on the regulatory developments in the country and overseas. Um, I would really appreciate if you would get in touch with us again, and maybe we can do another such webinar for the other chapters of ICI. So this time we only engaged with the Middle East and Asia regions. But definitely the next month we plan to get on board with the remaining chapters. So would definitely hope to see the same speakers, Arjun sir, Amit sir, and Hetal ma'am with us, because the topics, the way that you have imparted the knowledge on the said topic is really commendable. I myself don't belong to this profession, but coming from a law background, I have understood a lot of things. So thank you so much on behalf of the committee, the CA members in practice, and the whole ICAI. And thank you to the foreign chapter chairpersons as well.
Thank you.
Really appreciate it.
Sangini, you missed one important question that is very important from ICI perspective. Will the
Yes.
presentations be shared with all the attendees or not?
So we are fine with sharing the presentation. We'll love to share
Right.
it on this meeting.
Happy
The
to. I'd also
members
like
would
to,
be
before
Thank you.
ending, add one thing that whenever we, to all the participants present here and all of you esteemed chairs of these foreign jurisdictions, we always carry the vision of our PM. We are very passionate about that. And therefore, the way he talks about gift, if all of us can even do 1% of it, I would say it's a drop in the ocean to nation building. So gift is just that for us. And with exactly that passion, like Arjunji, me, all of us within Gift City talk about gift. So I'd encourage all of you within your jurisdictions to please be the flag bearers for gift.
Sure.
Trust me, you already have 4 flag bearers or 5 flag bearers with you from Fort Gilson. Don't worry, we are with you. Thank you.
So just
Thank
to
you.
add on Hetalji's comment, like it's a gift of the PMO to all of us professionals. If I was where with some of our other foreign chapters where I have heard from them, like if these opportunities would have been 10, 15 years before, we might have not gone outside. And what I am saying is next 10, 15 years, as very well told by Jay Bhai in starting, this century, these decades in coming 25, 30 years, 40 years are of India, and gift would going to play a very big and a major role. Whenever I start my gift session, I just tell that Singapore is 5 hours far, and Dubai is 3 hours far. But from Delhi, same jurisdiction, 10 years down the line is just an hour far. So, yes.
Perfect.
changes are being like seen in these last 1.5 years. There is a tremendous change. Now, like every week or 10 days, if I go, I see something different there. Something new is
I can add here, I'm here for last 4 years since the beginning of IFSCA. So if I show you the photo of 2020 and 2025, you can make out the difference, and this has completely changed in last 4 years.
Sir, Arjun sir, we know the difference. Why we know the difference? 2 years back, Amit Bhai used to come to Dubai. For last 2 years, I've not seen Amit Bhai to Dubai because Gift City is giving him or blessing him a lot.
no,
No, jokes
I mean,
apart.
no, I would be coming soon. I would be
For
coming.
promoting Gift City.
Thank you very much. We love the session and we are your torchbearers here. Anything required from our jurisdiction, please feel free to reach out to us and we'll support you in any ways we can. Thank you very much.
Thank you,
all.
everyone.
Thank you all.
Thank you.
Thank you,
Thank you.
everyone. Thank you so much.
Thank you. Bye.
Thank you, everyone.
Thank you.